Hi, good afternoon, everyone. It's my pleasure to be here today to speak with you here at Icon 2021. I have a very exciting topic to talk about, and that is cryptocurrencies, blockchain technology, and the future of finance. So I'm sure a lot of you have heard about cryptocurrencies, Bitcoin in particular, or Ether. And I hope that after this afternoon session, I would have been able to give you a better understanding, a good overview on what they actually are, and what other instruments we might expect to see given this whole digitization trend. I just want to give a couple of reminders also. All the opinions that I'll be sharing here are personal. They're not representative of PDAX, and as with anything that I will share with you today, they're not investment advice. So if you want to make investment decisions, please do your own research. And later on in the talk, I'll also be talking about other types of cryptocurrencies. I look forward to maybe addressing some of your questions during Q&A. So I guess for a lot of us who are new to cryptocurrencies, ang narinig lang natin recently is that Elon Musk said that he is buying Bitcoins. He's going to start accepting Bitcoins as payment for Tesla cars. And then afterwards, binawi niya. And then the market, moved up initially in Feb and then went to its all-time high of $60,000 per Bitcoin. And then now we're back down to somewhere around 38, 40,000 levels. All because, supposedly because he's tweeting. But obviously the story is much bigger than just Elon Musk tweeting. But you probably, at the minimum, would have heard about what's been going on in the market. Something else that you might have heard about are NFTs. Lately, we've been seeing a lot of projects in the NFT space. So there's NBA Top Shot, where you could actually buy thousands of dollars worth of NFT tokens that represent a moment in a player's career, right? So think of them as NBA cards, pero in digital form. And there are also other NFTs that are quite popular. NFTs first started with CryptoKitties. That was probably the most popular application of NFTs in its early days. What are CryptoKitties? Well, think of them as cats in token form, pero it's not like Bitcoin that's fungible, right? Where one Bitcoin is the same as another Bitcoin. Dito, because cats are unique and special, each CryptoKitty has its own characteristics. And later on, I'll talk a little bit more about NFTs and maybe share my thoughts around investing in NFTs. So today I'm going to start with just first talking about Bitcoin, because Bitcoin is what started everything. And for those of you who are already familiar with how Bitcoin works, please bear with me. I'll just give a short introduction there. And then I'm going to talk about what happened throughout the lifespan of Bitcoin, how it turned from an instrument that was really just traded in the margins, an instrument that's being exchanged by enthusiasts, to where it is today, which is somehow akin to digital gold, and something that even investment banks and hedge funds are making allocations for. Next, I'll talk about the institutional wave. So this has been happening to the crypto industry for almost a year now. More and more institutions are entering into the crypto space. And when I talk of institutions, I'm not talking about just big companies who are buying and selling cryptocurrencies. I'm talking about professional fund managers, banks, endowment funds, financial institutions who, like probably a lot of you, make investments on a risk-adjusted basis. And then last, I'll talk about other applications of blockchain technology, including NFTs and other applications in the traditional financial markets. Okay, so first, what is Bitcoin? Bitcoin is the world's first digital bearer instrument. What does that mean? A bearer instrument is something that the it's something whose ownership relies on whoever is holding it, right? So think of cash. If I'm holding 1,000 pesos in cash, that 1,000 pesos is mine. I can use it to pay for whatever. Now, Bitcoin is unique in being the world's first digital bearer instrument because before, there was really no way to have a bearer instrument in digital form, right? If you have, let's say, 10,000 pesos in your internet banking account, you will have to rely on that bank to attest that ikaw nga yung may-ari nung 10,000 pesos na yun. It's not like cash where as long as you hold it, it doesn't matter who else you transact with. You can give the cash and that cash stands for value. That cash is being transferred by you to pay for a good or a service. So Bitcoin is the world's first digital bearer instrument, and it was invented by a person or a group of persons that we now know as Satoshi Nakamoto. Okay? Satoshi is anonymous. We don't know who he is or who she is or who they are. But coming out of the financial crisis, Satoshi wrote this paper about a peer-to-peer electronic cash system. Okay, so at the time there was a lot of mistrust of banks and financial institutions that Satoshi decided that we should have a peer-to-peer electronic cash system that is not controlled by any central authority. So in its earlier days, Bitcoin had very minimal adoption, right? It was just being exchanged in groups of enthusiasts. But over time, it led to critical adoption, right? So a lot of people ended up using Bitcoin for all sorts of purchases, and then eventually Bitcoin got listed in various exchanges around the world. And now today, Bitcoin is one of the most widely traded assets globally, and right now the entire cryptocurrency market has a market capitalization of about $2 trillion. How does Bitcoin work? Well, I'm explaining to you how Bitcoin works because it's important to understand that as a starting point in order to understand how other cryptocurrencies work when you do your research later on. Bitcoin is like money that you can send as easily as you send email, right? So on the Bitcoin network, you have wallets, right? Think of them as email addresses, okay? So each wallet has a public key or a public address and a private key. Yung public address is what other users can use to send you Bitcoin, and private keys are what you use to access that wallet in order for you to send Bitcoin out. Now, what happens is if I have a Bitcoin wallet and I want to send a Bitcoin, some Bitcoins to my friend, all I have to do is input my private key, right? Parang email address and password, send an instruction, pay Joseph 5 Bitcoins, and that transaction gets validated by the Bitcoin network. So ano yung Bitcoin network niya? Think of them as a network of nodes or computers that are supporting the blockchain. What is the blockchain? The blockchain is the registry or the ledger, the distributed ledger, that keeps track of who owns how many Bitcoins. Okay, so if I send 5 Bitcoins to my friend, what happens is the nodes authenticate the transaction and they update the ledger or they update the blockchain. So all the nodes that carry a copy of the ledger become updated. That's why a lot of people say that Bitcoin is practically immutable, right? Or impossible to hack or compromise, because if you want to compromise the Bitcoin ledger or the blockchain, you're gonna have to compromise the entire system, right? And that takes too much computing power that it's not exactly feasible. Bitcoin is also engineered to be scarce. Okay, so there can only be 21 million Bitcoins ever created. How do Bitcoins get created? Okay, how do they come to be? Well, the nodes that I mentioned earlier, the ones that authenticate transactions and update the distributed ledger, they use a lot of computing power. And every time that a node authenticates a block of transactions, that node gets rewarded with Bitcoins. Okay? That activity is called mining. So if narinig nyo na yun, meron nang nag-invite sa inyo, oy, mag-mining tayo, that's exactly what it means, right? You host a node, you support the blockchain, and the blockchain rewards you with tokens. Now, okay, so if Bitcoin is just that, right, money that you can use to transact over the web, then why is it valuable, right? Well, like any kind of currency, Bitcoin is an instrumental good, meaning the value of Bitcoin depends on what you can exchange it for, right? So if I have 500 pesos in cash in my wallet, that's valuable because I can go to a store, I can go to 7-Eleven and actually exchange that for 500 pesos worth of goods and services. Okay, so that's why it has value. In the same way, Bitcoin has value or had value in its early days because people were accepting Bitcoin in exchange for goods and services. Okay, ngayon, the question is Bitcoin the ideal form of money? Is it the perfect money? Well, that's debatable, right? But because Bitcoin is scarce, a lot of people will not really want to spend Bitcoin, right? Because it's scarce, it tends to appreciate in value over time. People would rather hold Bitcoin than pass it around as a means of payment. So maybe it's not so ideal as a form of money, but thinking of Bitcoin in terms of money gives us probably a good understanding for how it acquired value in the market. Now, fast forward from 2009 to maybe 2015, 2016. That was when Bitcoin was, just in the margins, right? Very low market cap at the very low prices, and was also being used at the time to transact in illicit markets. Okay, why was Bitcoin so popular in illicit markets? Well, that's because Bitcoin being abstracted from the banking system, it's largely anonymous, right? Like you can transact with anyone without revealing your identity, right? So that became very attractive for bad actors at the time. But as Bitcoin adoption grew, a lot of new use cases started popping up, right? Remittances are one use case. So if na-try nyo na magpadala ng pera from one country to another, you'll notice that the process can be slow. And something that you might not notice is that the process can also be very expensive. There are studies that show that OFWs who send money back to the Philippines actually suffer 7 to 8% spread just in order to send money home. So if nagtatrabaho ka, like 12 months out of a year, 1 month out of the 12 months, you're working for the remittance company, 8%, right? And that's a lot, right? That's a lot. Is that something that is likely to change? Probably not, because the way the foreign exchange markets work is that if you're sending remittances from a third currency to another third currency, you go through two FX markets, right? So at least 3 or 4 banks will touch that process and will take fees out of the transaction. So it's costly, right? And crypto was seen as a means to bypass the FX markets and remit money peer-to-peer cross-border. Now, fast forward, people started to understand not just Bitcoin, but also the technology behind Bitcoin, which is blockchain. And uh, in 2016, 2017, a lot of projects popped up using blockchain technology to solve all sorts of real world problems. And this led to what we now know as the ICO craze, right? Where during 2017, a lot of tokens were being issued and they were valued at very, very high prices. And it led to a crash after 2017 and brought us into a bear market. But that was actually a very important turning point in the life of crypto, right? Because it showed that the technology itself is very viable as a means to transact items of real value. And later on, I'm going to talk about what those items now are, or what they can be also in the future. Now, fast forward, obviously we had the pandemic in 2020, and Bitcoin adopted a different role, right? And that role is that of digital gold. Now, why is that so important? Kasi in a pandemic, or in our current situation, it's very difficult to make good investments, right? Because economies are impaired, right? Unemployment is high. A lot of businesses suffered. They're not making money. So income's low, right? We also are wary about governments printing more cash or expanding their monetary supply just to cope with all the measures that are being taken to combat the pandemic. So there's also a lot of questions whether it's safe to keep your money in fiat currencies. Real estate, yes, normally real estate is a good investment, but we're also seeing certain sectors of real estate suffer, right? The office sector, hospitality, right? Travel and leisure, they're all down. And if you look at the equities market, it's also very worrisome because we don't know how much of the underlying economy is actually impaired, right? So in a situation like this pandemic, it's very difficult to decide what to invest in. And if meron mang pause button for you to just okay, pause muna ako, I don't know what to invest in, then investing in something like gold becomes more attractive, right? Because gold is scarce, gold is traded pretty much everywhere. So if you think that the local economy is not going to perform well, then your investment in gold will preserve your purchasing power. Now, in the same way, see, Bitcoin is like that, right? Very similar to gold. In fact, a lot of the attributes of Bitcoin that make it very attractive to investors today are closely resemble the attributes of gold. Bitcoin is pure, right? You can't really make fake Bitcoin. In fact, you can argue that gold sometimes is not so pure, right? Because you have alloys mixed, and you have gold mixed with other metals and so forth. Another attribute that they share is global liquidity, meaning the Bitcoin that you buy and sell in China is the same Bitcoin that you buy and sell in Brazil, in Mexico, in Europe, and in the Philippines. Now, why is that important? Global liquidity is important because if we don't believe in a local currency's ability to preserve its purchasing power, then you put your wealth or you put your value into something that doesn't rely on your local economy, right? And the global accessibility and liquidity of Bitcoin makes it a perfect instrument for precisely that purpose. If I buy Bitcoin here today and somehow the local economy crashes, my wealth is preserved because I can sell that Bitcoin in global markets and receive substantial value still. Uh, Arguably, the biggest difference between gold, arguably the only difference between Bitcoin and gold is its staying power, right? Bitcoin is still unproven. Bitcoin is barely 10 years old. Gold has been around for thousands of years, and so as a store of value, we still look at gold as probably that instrument, but more and more the narrative is changing. Bitcoin is fast becoming an alternative to gold. Now, this is the chart of gold, actually, from the 70s up to the present day. And if you'll notice, it looks very similar to the price chart of Bitcoin that I showed you earlier, right? We had an instance where there was a massive run-up, and then it crashed, and then now there's another massive uptrend. And that is actually indicative of the changing narrative of the asset over time. Right? I'm going to say that again. It's indicative of the changing narrative of that asset over time. Gold wasn't always gold, right? Gold wasn't always the store of value or the safe haven asset. At one point, gold was actually money, right? Prior to the 70s, when economies were still on the gold standard, gold actually backed money. So every dollar or every peso that you had represented a fixed quantity of gold held in reserve by the central bank. So that used to be the case. Now, but when we decided to get off the gold standard and adopt fiat currency, the question was asked, well, what's the use of gold now, right? Governments and banks still held a lot of gold, right? So gold is not necessarily worthless. Gold is still being used in jewelry. But more importantly, gold was still available for trading pretty much everywhere in the world, right? So if gold is no longer money and gold is scarce, then gold is your pause button, right? If you don't believe that the economy will perform, or if you don't think that you can make if you don't think that there are any good opportunities out there for investment, then you can probably hit the pause button by investing in gold. We saw this probably in its early days during the oil crisis, when the price of gold really shot up amidst a lot of uncertainty about the global equities market. Now, fast forward, I want to point out that since the late 90s and all through the 2000s, gold has been on this upward trajectory, right? Seemingly unending. Why is that? Well, that's probably because the role of gold as that safe haven asset with global liquidity became much more relevant in the advent of better transportation and communication and a more integrated global economy. Today, the global economy is the most that it's ever been interconnected, right? Companies have supply chains in Asia, distribution operations in Europe, headquarters in the US, etc. So the world today is very, very interconnected. And if, as an investor, you're worried about risks in certain industries and certain geographies, it's very likely that you won't be able to diversify away that risk by investing in another geography or in another jurisdiction, right? Because of how interconnected markets are today. So gold has had to or benefited from that, and really became this global instrument for people who are looking for a safe haven. And obviously, we had the COVID-19 pandemic, but instead of just flocking only to gold, we're seeing a lot of interest entering into Bitcoin as well. Now, what's been happening in 2020, 2021? Institutions are entering the crypto markets. And when I say institutions, I don't mean the likes of Elon Musk or even Michael Saylor. And that's because Elon Musk is still very much a corporate investor, right? His role is to maximize shareholder wealth. But when I talk about institutional investors or institutional support, I'm talking about fund managers, banks, hedge funds, who look at investing in assets to improve their portfolio's risk-adjusted returns, right? How much more value I'm getting in this investment versus the amount of risk that I'm exposed to. Okay? This one is just the slide here just shows a quick headline of Bank of New York Mellon starting to offer custody services for institutions looking to take part in the crypto markets. And this is very important because many institutions around the world cannot hold cryptocurrencies unless those cryptocurrencies are held by a qualified custodian. So all of this development around the crypto institutional ecosystem is helping bring more players into the cryptocurrency markets. And again, because the supply of something like Bitcoin is fixed, one might think that a lot of that interest will just go into the demand side. This is just a slide showing that before COVID, all the institutional investors in crypto were probably crypto native asset managers. But now, more and more in 2021, we're seeing traditional asset managers, traditional hedge fund managers investing in Bitcoin. Last week, maybe a big announcement was about Bridgewater. Ray Dalio said that he actually holds Bitcoin, and that Bitcoin is a better alternative for him than government bonds. Okay, so this is I'll touch on this briefly. If you're a portfolio investor, you might be interested in seeing this. So at the left-hand side, you see the correlations across asset classes. And what's important to note here is that Bitcoin is very much uncorrelated with any other asset class, right? Meaning, if you add Bitcoin in a portfolio, you lower the portfolio's overall risk, right? Because you're diversifying into an asset that has low correlations with other asset classes. One thing that it's also important to point out that despite the wild market activity we saw recently, over time, volatility in the crypto markets is actually declining. In 2017, we saw peak volatility, right? When it shot up to 20,000 and then crashed all the way back down. But arguably, even though we're seeing bigger moves today because there are bigger flows and more participants, volatility was somehow muted compared to what it was in 2017. Again, this is a good indicator that the asset class is maturing and cryptocurrency is becoming more and more a mainstream asset for investment purposes. So now that we've talked about Bitcoin, I want to talk about something that's arguably just as important as Bitcoin, and that is Ethereum. What is Ethereum? Well, similar to Bitcoin, Ethereum is also a distributed public ledger where all transactions are verified and recorded. Okay? But the biggest difference between Ethereum and Bitcoin is that Ethereum is actually a platform that can execute scripts and run applications. So you can create a lending platform on Ethereum. You can create art on Ethereum. For example, if you want to make sure that ownership of art is as transferable or as easily transferred as cryptocurrencies without losing any of the decentralization benefits or its bearer features, then you can build applications on Ethereum. Now, Ethereum is used for so many things. Okay, not just in trading, not just in gaming or in finance, but in actual infrastructure use cases like digital identity, digital land titles, digital securities, etc. But I'm going to focus on maybe a few Ethereum standards that are widely used today on Ethereum. So ERC20, what ERC20 is your standard for fungible tokens, meaning every ERC20 token is the same as every other one. A good example here is USDC, right, which is the dollar-backed stablecoin. An ERC20 USDC is the same as every other USDC, right? ERC 721 naman is the standard for non-fungible tokens. Earlier, I gave the example of CryptoKitties. Yes, lahat sila pusa, right? They are all cats. But then each cat is unique. Each cat has its own attributes and characteristics. And when you actually breed two CryptoKitties, you can actually come up with another CryptoKitty that itself is also very unique. And that is why you had markets for CryptoKitties, and they were being sold for thousands of dollars because, again, every cat is unique. Now, that was 2017. Today, we have other applications of NFTs that are arguably far more exciting. So one thing I want to talk about is Zedrun, which are parang CryptoKitties pero hindi cats, right? We're talking about crypto horses, right? And itong horses na to, you can actually race them. Okay, so you can have digital, fully digitized horse racing, and you can just imagine how many. You can just imagine how big a gaming market can be for that. We're also seeing NFT music, right? So music in token form. You might wonder, well, why would anyone? What's the purpose of an NFT? Okay. Well, siguro in the example of NBA Top Shot, if you collect NBA cards. The rarer the card, the more valuable it is, right? And how do you prove that it's rare? Well, it has to be original. It has to be authentic. NFTs are a way for us to ensure authenticity, but at the same time, making the instrument more exchangeable, right? Because it's digital, you can pass the token around from owner to owner. But because it's on the blockchain, nobody could have faked it. Nobody could have created their own NBA card or NBA moment, right? So that is the need that NFTs are actually addressing in this use case, right? Assurance of authenticity and ease of transfer. Now, how about crypto music, right, or NFT music? Well, it's not really a secret that when artists produce content, produce their work, they don't always earn the most from what they produce, right? Distributors, production companies take up a lot of that revenue because they are the ones who are closer to the actual customers and are able to probably command more bargaining power. But with NFT music, you can actually create smart contracts that play NFT music, and every time that the music is played, perhaps a small amount of payment goes directly to the wallet of the artist, right? Or if you stop paying for music, then the token, or quote unquote the music file, will not play. So it's a way for artists to make sure that they are the ones who are actually earning from what they produce. Now, this can be very exciting if you start to imagine maybe a Spotify that only plays NFT music, right? I can imagine a lot of artists would want to list their content on that application simply because they would be able to cut out the middleman. They will be able to earn every time their music is played, as opposed to selling an album and then having people copy the music and transfer it across to all of their friends, right? Very exciting also is the possibility of applying that in something like Netflix, right? So maybe consumers of content can bid for the content that they want, right? Let's say we can maybe decide that, hey, we want another season of Game of Thrones, or we want to remake the last season, etc. Then perhaps we can create a smart contract where we can stake some amount of tokens, and if we reach enough to fund another season of Game of Thrones, then that content or that project gets funded. And every time that people subscribe and watch, all the proceeds go to the artists. So these applications were not possible before blockchain technology, certainly before Ethereum came along. Outside of NFTs, obviously we're seeing a lot of decentralized financial applications, or DeFi. They allow for, let's say, traditional financial services to be executed without the middleman, right? So think about peer-to-peer trading with smart contract enabled collateral management, right? So it can be a very secure form of lending, no risk of default, etc. So again, there's a lot of exciting things in the blockchain industry, certainly in the cryptocurrency space. And a lot of times as investors, and I think that's what most of us are here in taking part in Icon, masyadong nakakaengganyo yung gains, right? We would have friends na magpo-post na they gained 20% overnight, 30% in a week, or they quadrupled their money in a year. So all of these gains are very, very, very enticing. But at the same time, it's important to keep in mind that cryptocurrencies are very new, right? So it's still not a mature industry. There's still a lot of volatility. There's still a lot of bad actors in the space who would be just too happy to just scam you. So it's very important that as you take part in cryptocurrencies, you do your own research, right? You rely on credible sources. You transact at legitimate marketplaces for your own protection. And I think once you start educating yourself more around the cryptocurrency space, you will find that taking part in the future of trading is not just profitable, but it's also rather enjoyable. So thank you so much, and I look forward to all of your questions.